Okay, one of the big questions outside of what happens with trade and earnings is what happens with central bank interest rate decisions. Now, the U.S. Federal Reserve has a key meeting coming up at the end of this month, and there's a lot of folks on Wall Street who are not expecting the Fed to make a move. But our next guest is very closely tracking what could happen at that meeting. Tom Bruce is a macro investment strategist at Tanglewood Total Wealth Management and joins us now. Tom, thanks very much for being with us. And I guess we will get some comments later today about the state of the economy. Jerome Powell is set to make a few comments. But on this subject of rate cuts, what are you watching right now? What are you seeing in the data?
Hi, thank you for having me. So, to be clear, next week I'm not expecting a rate cut from the Federal Reserve, but there's becoming a very solid case for one at this juncture. And, from what we've seen so far, it looks like these tariffs aren't having a major impact on prices. We're only seeing a little bit of goods inflation coming in from them. So from the inflation side of the mandate, things are looking okay. Couple that with the fact the housing market in the U.S. isn't what it was before. I think the northern U.S. is doing okay, but the southern U.S. has struggled. It's been struggling for years. The high mortgage rates have really locked out a lot of people from buying in the market. And, at this point, we're seeing prices come down in a lot of places. So you're seeing, from the housing market, a deflationary effect going on. You're seeing prices come down, you're seeing rents come down. And going forward, that's going to weigh on shelter costs. So, we're probably going to see a greater deflationary impact going forward than a lot of people expect. So you look at what the Fed's doing now, they're not making any moves. I think that probably should to help bolster the housing market. The southern U.S., it's responsible for the majority of home construction in the U.S., and there's a multiplier effect from that. So the weakness we're seeing really has the potential to manifest if it's not, taken seriously.
Because, home prices, some of the data suggesting to you that there's some softness there, but you've still got elevated interest rates overall.
Exactly. A lower mortgage rate could really help spur the housing market and just support overall. Have not just elevate prices, but just increase activity, which is really what's needed to sort of free up that sector of the economy. But as a whole, so there's a strong case for cutting in July. I don't think it's going to happen. I think September, we're probably going to see that cut. So that's what I'm looking for right now from the Fed.
And how do you feel about the constant drama between U.S. President Trump and Fed Chair Powell? I mean, it almost feels, even though we, historically have not put that as a consideration, it's hard not to think that Jay Powell, in the back rooms isn't thinking about if he were to cut rates, if he felt that he needed to, what would be some of the headlines around it if you were to do it at this juncture, just because the president has been so pushy on the subject?
I really believe he's above politics, and he's been under a lot of pressure from this administration, but I don't think it's getting to him. And, there's been a lot of discussion of a shadow Fed chair coming in. We don't know who exactly, but maybe later this year, there's an early announcement of the next nominee for Fed chair that, may undermine Jay Powell. Well, something to really consider, a lot of people aren't talking about, is Powell's term ends as Fed chair next year, but his term on the Board of Governors ends in 2028. So he could perfectly well stay on next year and beyond and really be a thorn in the side of this administration going forward and for the next Fed chair.
Now, let me just talk to you, Tom, about the trade story itself, because we already had a conversation this morning about how it seems very difficult to figure out at this point what the economic ramifications are, wherever we land on trade. And that would include just in terms of the economic impact, but also the inflationary impact. But would you care to put a foot forward and give us your best guess? Because everybody just keeps talking about, oh, it's uncertain, we don't know. And then obviously the central banks as well have been trying to sort of earn buy-in on that they need some time to see the net impact. How does that all play out?
I agree, it's uncertain. No one knows how it's going to play out exactly, but so far what we've seen is extensions after extensions for deadlines with trade negotiations, and you can't wait forever for you to make a move. So, the way I'm looking at it right now, I think the U.S. is probably conservatively 100 basis points above the neutral rate. So I think it's time to get started cutting a little bit. It's not going to make a big difference if we cut 25 basis points, say now, versus waiting a few months. And we're pretty restrictive, so we might as well go ahead and do it, regardless of how the trade relations work out, because it's hard to say how that's going to end at this juncture.